Hey everyone, hope you're doing well. I wanted to make another kind of little helpful video on showing breakout patterns. And these patterns are more typical. You'll see, or you'll hear at the very least, other traders use them, and you'll see them and how they apply them while they're trading. These are just things I've noticed over the time I've been doing it. Um, and three of them in particular is a flag pattern, a dollar breakout pattern, and a support and resistance pattern. And each one can kind of give you that inclination that there's something about to happen. But of course, you would need volume bars to come in. Like you see down here, you need big volume bars to kind of guarantee that the pattern you're seeing unfold is actually legit. Um, that's the main thing. Volume's always going to tell you that the play that you're in is right. If there's no volume in it, then it's probably not going to work out the way you want. But the most common one you see is a flag pattern, kind of like right here, where you'll see, maybe not zoom in so much. There we go. You'll see a large candle like this. Like all these other ones are small, small, little bit bigger, but small, small, small. And you'll see the volume come in, and you'll see a much larger candle, which will kind of make like this flag, like this. So just imagine the candle body is like the flag itself, and then these candlesticks right here are kind of like the flag waving. So this is a bull flag because it's green, it's going upward, it's pushing the stock up. And here's kind of another one where this is a, oops, put on a horizontal one, didn't want that. This one's it's a upward trending kind of flag. But again, the large candlestick, you see the smaller volume bars, and you see a large one come in, so you see a big candlestick. So that's like the post, and then this is the flag again. If we move over, we'll see another one right here. Again, you'll see kind of smaller volume bars here, then you'll see a bigger one come up, and you'll see a large candlestick, and then you'll have the other candlesticks here kind of making the flag. So you have a large candlestick and then a flag. And see if there's any more obvious one. This is kind of like one, but the volume is really not that different, so I won't really count that one. This is kind of like a bear flag right here. See how it's a big drop? And then these smaller candles coming in here are like the flag. So this would be a bearish flag. So you have bull and bearish flags. Bull going up, usually green. Bear flags red coming down. Now these aren't the perfect flag patterns, but you're not going to see perfect flag patterns, when you're trading. You're going to kind of have to make guesses on what you see, and I shouldn't say make guesses, but determine if what you see you think is true. And here's like another one. If you think it's actually a bull breakout flag type pattern. So you have this one here, then you kind of have another flag on top of that, which is like here. You can see the flag. So every time I'm drawing these yellow lines, I'm kind of making like the flag. The green body is the pole, and the lines I'm drawing are basically the flag. But and those are all like just patterns saying that there's a strong upward momentum at the moment, and you can see that by the volume being verified here. There's a lot of volume. There's around 75K topping on this one. Now it's not the most volume in the world, but it's enough to push these up and to make these type of flag patterns. And again, like I said, they could go either way. They could be a bull flag, which is green and going up. They could be a bear flag, which is red and going down. And these are the kind of the common outbreaks that people look for, where everything's kind of normal here. Along this, there's not a lot of volume. They all of a sudden spike, and when that volume spikes, there's a bar that correlates with it. So that's kind of what a bull flag would look like, or a bear flag would look like. Another one that's pretty common is the dollar breakout. Now you see right here, the line going across is just the previous day's close or open, but it's right at that $1 mark. Now this isn't the best example for what I'm trying to say, but you see at that $1 how it breaks above it. the stock shoots up. So before it was like 90 cents, 80 cents, whatever, and then it finally broke it above $1, and it gives it that volume. And the reason why that's a good thing is because if it was like a stock like Tesla or Amazon or something that it's $100 stock, $1,000 stock, no one would care that it moved up $1. Like it wouldn't be a big deal. It'd just be trending upwards. It wouldn't be anything exciting. But on penny stocks, which are lower stocks like these ones between $1 and $10, it is a big deal because that means that there's breaking into like a new high level that's never been before, and these stocks are kind of becoming like more legitimate and making more money. And you even see on here, let's put a horizontal on. Maybe we'll remove these so that won't be, you guys won't be distracted by them. But the stock right here was kind of touching above $2, and then it went above it and kind of went sideways, and it stayed under it, and then it finally broke past $2 and it shot up to 210. So it jumped 10 cents in one candle. Now sometimes, and this is a good example because it did break above $2 and it didn't shoot up. It shot up after it hit above it the second time. And not every time, you get these patterns, it's going to guarantee that there's going to be that breakout that you want. But it's more typically when you see them, other traders will also notice them. And that's kind of what gets you that volume and makes those patterns work out, is because everyone's trading them. And you want to be in basically earlier, or you want to be in sooner rather than later. So this is like a $2 break mark. So this jumped up like that 10 cents pretty good. And then it kind of started consolidating upwards again. But that's kind of an example of a dollar breakout. Now sometimes you'll see that same move at like $1.50, $1.25, different numbers. And here's an example right here is $1.80, like a 10 cent kind of mark, $1.80. People for whatever reason like fives and zeros, they're like 25, 50, $1, sometimes 90, 80, whatever. They like more round numbers, and that's typically where they place their trades, or around those round numbers, so they could buy or sell around $1.80 because 80 is a round number, or they could buy in at or sell at $1.50 because that's a round number. But the most volume usually come in when it comes in for that is at that $1 mark. $1, $2, $3, $4. That's when the most of it comes in. Some of it still comes in at the smaller amounts, like $1.75, $1.50, 25 cents, whatever. And then even the breaks of sometimes the 10-cent marks, but it's typically more the dollar break and the half-dollar break. Those are usually when people start jumping in or jumping out, depending. It's just easier for people to place trades at those prices, and you kind of want to like take advantage of that, so you pay attention to it. So that's basically another example of a breakout type pattern. And the third one would be basically old support and resistance. If you see down here on this daily chart, you see there's a big, the stock was kind of going up, down, going sideways, and then this big drop right here. So basically this drop right here is creating a open gap for the stock to trend up and down, or trend up and down. But if you take the top of this red candle, which is basically the top of this lower area, and you put a line on it, and then you take the bottom of these candles here, put a line on that, you'll see kind of a support and a resistance line. And if you look here today, once this candle basically broke that 150 mark, which again is like kind of like a $1/2 breakout mark, look how much it shot up in one day. It went from the low of 150 all the way to $2.82, which is the resistance of the previous, or this previous higher area up here after it dropped. So it's kind of coming back to its old highs over here. Now you also see, of course, the big volume bar right here, which is letting you know that there's a lot of action going on and people are buying and selling it. But the point I'm trying to make is this resistance line here, or it was a resistance line, because look at all this trading under here. It was trading under that mark for like 2 to 3 months. It wasn't breaking above the $1.50. And then all of a sudden, it gets a good catalyst in the news, and then it cracks above 250 or 150, and then the sky's the limit. It just shoots all the way up. It even goes past the 200-day moving average, kind of blows past it. But you could tell though, this brown line, the 200-day, it didn't close much above it. The candle wick tells you that it ran at a high of the previous resistance here, but it came back down and ultimately closed just barely right above it. So now it has new support, new highs, and it made a pretty big move in one day, over 100% or around 100%. But when you guys are looking for these stocks, simple like breakout and resistance, or support and resistance, dollar breakouts, flag patterns, these are all kind of relatively basic in the sense that traders talk about them all the time. But I think that's like the part people have a hard time kind of focusing on and seeing them. So it's good to kind of try to illustrate this for you all. And of course, there's tons of other videos. You could search articles and all kinds of things. You could read books on this. There's plenty of information. If you don't understand any of this, you could rewatch, and you could learn this even better. I'm just giving you a kind of a quick opinion of what I think and how I look at it, to show you, well, just to give you that variance of other ideas and stuff to help you learn it. But those are kind of just the patterns to look for. Those are just three simple ones that appear like daily. These penny stocks are usually going to be clearing the dollar mark, 50-cent mark, whatever, and that's going to give it breakout momentum. They're gonna get a flag pattern, because it's going to break from a resistance or that dollar mark or something, and you're going to see it shoot up. You're going to see a large candle, and then it's going to consolidate into a flag. And then depending how you want to play it after that, there could be another pop after it, or another flag, and you could prepare yourself before that and get in, while other traders will get in after it. You'll try to get in before it, while they'll get in after it, so you'll have a better profit. And then just looking at old support and resistance to kind of give you a range of where that stock could potentially run to. So those are just like a few tools. There's many out there. I'm not saying use them all. Like, I'm not saying go crazy, but learning at least just a few to kind of have in your own skill set, I think is definitely going to help you progress through this and make it easier for you. Is being able to recognize when these things are happening. Because especially if you're like in a chat room, or you see people like on Twitter or whatever posting certain terms or words that say breakout pattern, candlestick, whatever, and you're like, what does that mean? Like, these are kind of like what they're talking about. This is an idea of what it means when they say $1 breakout, support and resistance, bull or bear flag. This is kind of what they're talking about. And again, like I said, there's plenty of information online you could find about this, free on YouTube, free on Google, articles, whatever. You could easily teach this to yourself. You just have to put in the time to learn it. So hopefully this was a little more informational for you guys, and you're going to benefit from it. And as always, if you have other questions on some of this stuff, I'll try to answer them. If you have other patterns that you're unfamiliar with, maybe you heard but you're unsure of, and you want to like ask me, and maybe I know I could explain it, or even better, make a video, I'll be more than happy to do that. And as always, like, if you all want to subscribe and like my channel, that'll help me kind of keep making these videos. Because if no one asks questions, or if no one's making comments and stuff, I think basically no one wants to see this stuff. So I'll probably stop making videos. But so far it's been great. Been getting a lot of feedback, so I continue to keep making them. And you can follow me on, or at App Trades on Twitter, and you can get updated market data as often as I post, which is not that often, but like at least every week, and it kind of help you along your trading career there. So again, hope that was helpful, and I'll talk to you all in the next one.